Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this special crossover episode of ESG Talks, we're featuring an episode from KBRA's podcast series, Conversations in European Credit. Listen in as I chat with KBRA's Head of European Research, Gordon Kerr, and Killian Walsh from KBRA's European ABS ratings team. The three of us discuss the increase in solar voltaic funding in Europe and the potential for the use of securitization to support the green transition.
Hello, welcome European listeners and market participants, and welcome to KBRA's latest European Credit podcast, Conversations in European Credit. I'm Gordon Kerr, Head of European Research at KBRA, and today I'm joined by my colleagues, Emilie Nadler from our ESG team and Killian Walsh from our European ABS credit rating team. We'll be covering the topic of solar photovoltaic, or PV, and its expansion in Europe and the potential for it to be funded through the capital markets, in particular via the securitization market. We have outlined this in greater detail in our report on our website, or you can even check our LinkedIn post with a catchy video and take a look at it there. Across Europe, the European Commission is pushing forwards a green agenda, which has been reinforced and potentially accelerated as a result of Russia's invasion of the Ukraine. Energy security has become a priority, and a part of this drive is the increasing role of rooftop solar PV adoption, and implementation will differ between the different EU member states. The current economic backdrop represents a challenge to the solar market with increasing affordability challenges. However, one of the major challenges for the expansion of the region to meet its targets is a lack of available funding. This is starting to change, and one way that capital markets can help is via the asset-backed securities market. Solar PV financing collateral has been a growing part of the securitization market in the United States for the past 7 years, accounting for nearly $9 billion issued in 2022 alone, after emerging 7 years ago in 2016. This contrasts with Europe, where the securitization market has yet to become a source of capital market funding for the expansion of the rooftop solar PV lending. Now, let's first discuss the ESG and solar market with my colleague from our ESG team, Emilie Nadler. Emilie, how are you?
I'm good. Thanks for having me on.
Emilie, the Russia-Ukraine war has driven up energy prices in Europe. Now, how does this impact the drive towards energy security and more precisely, sustainable energy?
So to start, primary energy production in the EU decreased between 2010 and 2020, partly because of the bloc's decarbonization efforts. However, Russia's invasion of Ukraine in February 2022 really put a spotlight on the EU's high energy dependency. It imports over 60% of its energy needs from external countries, and much of this comes from Russia. We actually published a research piece called The Russia-Ukraine Conflict and Europe's Energy Dependency. So I would encourage listeners to read that for more information on this dynamic. But broadly, electricity prices have more than doubled over 2021 levels, which had already more than doubled versus historical levels between 2015 and 2020. Electricity wholesale prices in Europe reached a peak in August 2022, with day-ahead prices of over 500 euros per megawatt hour. Energy prices have since declined from that peak, but remain elevated in historical terms. So this high energy price environment is really supporting the expansion of renewable energy projects as it shortens the payback time required for upfront installation costs. And additionally, as you mentioned, there's just huge drive to improve energy security in the EU in the wake of the impact of the Russia-Ukraine war, including using energy supplies as political leverage.
Thanks, Emilie. So what can Europe really do to decrease its reliance upon Russian energy?
So the EU has a huge incentive to boost regional energy production, but it's also conscious of attempting to align these efforts with the European Green Deal and prioritize clean sources of energy. So during the period of 2010 to 2020, production from renewable energy was actually the only source of energy to have increased in the EU. It increased by just over 39%. In 2020, renewable energy accounted for around 40% of the EU's total production, followed by nuclear energy at 30.5%. So the EU has been introducing various initiatives since the Ukraine invasion. In May 2022, the Commission introduced its Repower EU plan, and a portion of that plan is dedicated to boosting solar energy. So one of the 3 solar energy programs, the EU Solar Rooftops Initiative, focuses on the expansion of rooftop solar PV on commercial and residential buildings. According to a Commission study, rooftop solar PV could potentially produce 680 terawatt hours of electricity annually, representing nearly 25% of current EU electricity consumptions. So specifically, the EU initiative seeks to increase renewable energy generation by 45% by 2030 versus the previous 40% target. It aims to limit the length of permitting for installations to a maximum of 3 months. It also adopts provisions to ensure that all new buildings are solar ready. It introduces compulsory installation of rooftop solar PV on new public and commercial buildings over 250 square meters by 2026, existing buildings by 2027, and new residential buildings by 2029. And then it also allows consumers in multi-apartment buildings the right to access the solar energy generated without undue costs. So the overall goal is to bring over 320 gigawatts and 600 gigawatts of solar PV online by 2025 and 2030, respectively. So this will certainly be a boost for EU energy production.
So those sound like ambitious plans in terms of energy security and improvement in renewables. So how far do plans for solar PV adoption go in terms of Europe?
So the uptake and the growth of solar PV technology varies across different European countries. For example, Italy has historically shown a high level of solar adoption, producing over 24,000 gigawatt hours in December 2017. And this rose to over 27,000 gigawatt hours on a rolling 12-month basis as of October 2022. In contrast, the Netherlands has gone from just under 2,000 gigawatts in December 2017 to reach approximately 17,000 gigawatt hours as of October 2022. Meanwhile, the cumulative increase across the EU totaled just under 194,000 gigawatt hours in 2022, compared to approximately 99,000 gigawatt hours in 2017. So under the European climate law, the EU has set a legally binding net zero emissions target by 2050, as well as an interim goal of reducing emissions by at least 55% by 2030 relative to 1990 levels. So as the region works to reduce its overall greenhouse gas emissions, each member country is required to publish a 10-year National Energy and Climate Plan, or NECP, to meet the EU's energy and climate targets for 2030. The NECPs include energy efficiency programs, emissions reduction targets, improved grid interconnections, research and innovation, as well as expansions in the use of renewables, and importantly, detailed targets for solar PV. The most ambitious country in terms of planned solar energy generation is Germany, which targets installed capacity of 215 gigawatts by 2030. Italy has the next highest target at 71.2 gigawatts of solar capacity, followed by the UK at 50 gigawatts, and then both Spain and France at 40 gigawatts. However, while these numbers are significant, most important is the ability of households, businesses, and individuals to benefit from renewable electricity generation. So it's also useful to look at installed capacity on a per capita basis. And on this basis, the most ambitious countries are the Netherlands, Denmark, Germany, and Austria.
Many thanks, Emilie. That's very interesting and sets an interesting backdrop in terms of the solar PV market. Now, let's turn our attentions over to Killian Walsh and how the European region is going to fund these plans. And Killian, how will the region manage to finance the expansion of all of this solar capacity to meet these ambitious targets?
Thanks, Gordon, and thanks, Emilie, for outlining all of the kind of the targets, etc. I think historically what we've seen is that businesses and higher income households have been the early adopters of rooftop solar, as they have the available funds to support the upfront installation costs for recouping their initial investment with lower energy bills. In order for EU countries to meet all of the various targets, the National Energy and Climate Plan targets that Emilie outlined, additional finance options are needed. Some countries have historically provided support in that transition, including items like feed-in tariff subsidies, VAT tax breaks, grants, and more. However, in order to increase the wide-scale adoption of solar rooftops, financing will be needed to assist the conversion of older residential and commercial properties to generate and use solar rooftop energy. When we look at the US solar ABS securitization market, that could provide a blueprint in this area, as it has proven to be a supportive factor in the growth of this market. In the US, by way of example, solar PV has experienced an annual growth rate of over 33% the past decade, thanks to strong federal support in policies like solar investment tax credit, rapidly declining costs, and increasing demand across the private and public sectors for clean electricity. The country has more than 135 gigawatts of solar capacity installed nationwide as of Q3 2022, which is enough to power over 23 million homes.
Thank you very much, Killian. The US has been quite successful at turning to the capital markets for funding across various different products, and solar PV has certainly been one of those in the past several years in order to obtain funding to support the growth of the market. So, with regards to the US market and solar PV, how has this developed over the past several years?
Well, I think it's interesting. I think you alluded it, Gordon, in your introduction, that from a position of solar ABS having no transactions in 2015, but speaking of what KBRA's activity has been in the market, it's rated over 98 solar ABS transactions as of 2022. So that's pretty significant growth in that solar rated space, and that totals over 27 billion. And to break that down, it's 25 solar lease transactions totaling 6.7 billion and 73 solar loan transactions accounting for 21 billion. And we've also rated deals in other related sectors with 31 residential PACE transactions for 6 billion and 40 solar project finance transactions, 3 of which were done in Europe, and they totaled 10 billion. So it's been from a position from a European context where, there's been very little solar activity. I think the US does provide the blueprint for growth, where you had nothing in 2015 to what is now a very active market.
Thank you. So a lot of the people that will listen to this podcast are obviously going to come at it from an ESG angle and not necessarily understand how solar PV works and how, broadly speaking, capital markets funding works. But they're not necessarily going to understand how these solar PV products work in terms of the ABS market. So if we were to compare these to other securitization transactions, how does the solar collateral market differ?
Well, I think when we comparing it to kind of traditional securitization, I think when you look at a solar loan specifically, there's some unique features and concepts that you need to look at. I suppose primarily the technology of the solar panels, namely the reliability of solar panels and their energy efficiency, the level of deterioration of their performance over time, and the cost and timing of their replacement is a key factor we would look at. Clearly as well, contracts and agreements, the structure of the contracts, any element within the loan or lease unique to solar agreements, and potential penalties for non-compliance. The transaction participants is another key factor we would need to look at, or a transaction would need to consider, such as the business models of the entities within a transaction. The underwriting practices of the lender is always a key analytical point, or the lessor, and the potential for consolidation in the market. And I suppose the final thing one needs to think about specifically to solar is the regulation environment. In the US, we look at state laws. Clearly, in a European context, we need to look at that specific jurisdictional law that may impact the product, loan, or lease. In addition, tax structure of the finance and potential incentives, as well as judicial processes and the impact of financing for the consumer. So I think in broad terms, at its fundamental, a lot of this is looking at consumer performance, but there are specific elements of the solar product that we look at each time we consider a transaction.
In the US market, there are 2 main broad types of financing that are used in these solar ABS transactions. They are both loans or leases. What are the main differences between these 2 different types of collateral?
Yeah, and I think we're beginning to see in the kind of transactions that are being discussed in a European context, we're seeing both types of product as well. So in short, the purchase of a solar equipment in the US is either done through the loan or through a power purchase agreement, PPA or lease. Under a solar loan, it's the customer borrowing for the purpose of purchasing a residential solar energy system installation, and sometimes financing other products associated with that, such as solar storage systems or EV charging stations. The loan is typically secured by the solar energy system through a legal filing of a claim against those assets. Under the solar lease and PPA transactions, it's the leasing company that retains ownership of the solar equipment and leases it to the homeowners. Lease contracts require a flat payment each period, regardless of that production during the period. In order to protect the customer against significant deterioration in production, lease contracts have a performance guarantee provisions. These require the originator to compensate the customer in the event that production is below the guaranteed amount at a predetermined per kilowatt hour. Under a power purchase agreement, the customer pays for the power produced by the PV system during that period at a predetermined per kilowatt hour rate, and that is often subject to an annual escalator.
So these transactions now, as we highlighted, have been outstanding since 2016 when the first transactions were done. How has the underlying collateral performed, the loans and leases in the US?
I think in broad terms, very well. I think what we do in KBRA is we publish a monthly solar loan ABS index. We also produce several other indices for other consumer performance, but we produce a specific solar loan index as well, which is widely tracked by the market in the US, the solar loan market and solar lease market. The solar loan index includes credit performance metrics from all US publicly rated securitized solar loan collateral pools and is weighted by each collateral pool's outstanding balance at the end of each month. The indices are calculated based on the performance data available in that month. New transactions are added as they're issued after an initial seasoning period of 6 months, while older transactions season and generally reduce in size. The latest index show, as we would expect, that delinquencies over the past year are beginning to increase in the US as homeowners face challenging times with increased living costs and higher interest rates. However, they've still yet to surpass their prior peak levels from 2019 and 2020. In terms of annualized net losses, they stood at an average of 1.4% in December 2022, which was an increase in the prior year levels of 0.67%. But again, I'd comment that these levels are still well below the peak of 2.58% in July 2020.
That sounds great, Killian. So what is the potential for this in terms of the European market and how it could develop?
Yeah, and again, I suppose it refers to what I described at the initial part was, as Europe aims to support solar PV expansion rapidly, securitization can play a positive and maybe even key role in the market. The appeal of solar ABS securitization is its ability to allow lenders to recycle funds into new lending. In the US, we have witnessed that the asset class has grown from infancy in 2016 to a mature and well-established asset class with a stable development in performance to date. There is now an opportunity for Europe to follow a similar trajectory in developing a deep and well-functioning asset class, providing structural and efficient financing to support the increasing need for residential and commercial rooftop solar development. Value proposition where consumers can achieve meaningful savings compared to utility bills on a monthly or lifetime basis is made more appealing by the increasing energy prices we're facing. Households that use solar PV system are also at a reduced risk from volatile energy prices and can contribute to a country's energy security and independence. So I think where we are at the moment is hopefully Europe is at the kind of the beginning of this journey. And I think witnessing the journey we've seen in the US, it does offer a blueprint or roadmap that you can see European solar PV securitizations grow through time.
Thank you very much, Killian. So in conclusion, the environment is really right for the increased use of solar rooftop energy. And I can anecdotally say that I have a number of friends that are now considering putting solar panels on their roofs here in Europe. And the financing of this product does remain nascent, but it is rapidly developing to fill that growing need across Europe. The capital markets have proven to offer a solution to increase the speed of adoption across the region. Using the US example, we can see that the demand for investors to invest into this space And KBRA has actively been monitoring the development of this market in the US and been an active participant in it. And we here in Europe are actively monitoring it as well. And we hope that the capital markets in Europe can help countries to achieve their targets. So thank you very much for listening. Thank you very much, Emilie and Killian. Make sure you are registered on our website, kbra.com, have subscribed to our podcast, and of course, are engaged with our experienced analysts. Thank you very much for listening. We look forward to bringing you more conversations in European credit. Stay lean and green out there as we all navigate towards a better environment. Thank you very much.
This concludes our episode. Please continue the conversation on LinkedIn and Twitter at Kroll Bond Rating. We'd also like to remind you that all of our ratings and research reports are available at kbra.com. Lastly, please share any feedback or ideas for future podcast episodes by emailing us at media@kbra.com. We hope to see you next time.